If you want to know how to spot a perfect entry, let me show you how to draw fair value gaps. Fair value gaps happen whenever price moves up or down so quickly, it creates a gap in between a 3-candle structure. So you always want to look for a 3-candle structure, either bullish or bearish. And in our example, when it comes to meta on our 4-hour time frame, there's a huge gap in between candle 1, which is this right here, and candle 3, which is this right here. And you see the gap is highlighted by this second candle. So there was a gap in between from 707 all the way to 739. So price was not traded in this area because price jumped up very quickly. So to create and draw our fair value gap, we go to the top of our first candle and the bottom of our third candle. And this is for a bullish structure. And that's how you draw your fair value gap. Now, usually these fair value gaps act as magnets for price to retrace back into. Price could potentially, drop into this fair value gap, play around a little bit. But then once, let's just say the buyers gain control over here, then you're able to make an entry over here at the top of our rectangle and then, go up with the stock. And the opposite is also the same. We could see the stock play around in this fair value gap, but then the sellers gain control, right? And then after that, the stock goes down. And that would create our perfect entry spot at the bottom of this rectangle. So these fair value gaps act as magnets for price to go back into. But if a gap is starting to get filled, you want to see the activity of the price at the top or at the bottom of the gap. Who has more control, the buyers or the sellers? And this creates a perfect entry spot. Now, if you guys want to see an example, Amazon created this bullish fair value gap, right, in between July 18th and July 21st. So we have this gap from our first candle right over here and our third candle right over here. So on our smaller time frame, we saw that price went back into our gap, played around a little bit in the gap, and then it finally maintained control at the top of the gap, and this presented a perfect entry for Amazon, right? And then we saw us skyrocket to $234. And to draw a bearish fair value gap, the same is also true. You just need to look for a 3-candle structure. So for Tesla this time, we're on our 4-hour time frame. This will be our first candle. This is our second candle, and this is our third candle. You can see the gap in between our first and third candle, but this time, for our bearish fair value gap, we're going to draw our rectangle starting at the bottom of our first candle all the way to the top of our third candle, and we're going to stretch it out a little bit. As you can see, guys, the stock actually rejected the top of our candle, and price failed to maintain the bottom of our fair value gap and then eventually dropped. So you could have had 2 entry points. At the top of this fair value gap, if you saw a rejection, you could have dropped all the way to the bottom, or you could have entered at the bottom of this fair value gap and then dropped from 319 all the way to 309. That's still a very good return.